largest misconceptions when it comes to real estate. Most people do not know or understand that they can qualify for a loan. Especially a lot of times they can pay less for a mortgage than what they're currently paying in rent. And a lot of people are just completely confused on this process and don't even know where to start. So, what's your suggestion on that?
It's an accurate concept that a lot of people don't know where to start. And so the easiest thing to do is rent, because that's easy, because you can fill out a simple application and then they give you a pick of whatever houses you have. The thing about buying a home, though, is the process is just that easy to start. Whereas with a rental, you have to fill out a credit application and you show them a pay stub. You're going to do the same thing when you talk to a lender. They're going to do an intake interview. It takes about 10 minutes. They're going to find out what you're looking for as far as home, and they're going to fit that with your budget. The difference is, though, when you find a house, it's going to be yours, and you're not going to be paying someone else's mortgage.
Got it. So your suggestion would be to somebody that's out there that's renting, potentially what?
So if you already are in a property, even if you have 6 months left on your lease or more, it's a good idea to find a lender that you're comfortable with and talk to them about buying a home, because there's no timeline on it. So even if your credit still needs some work, you have time because you're in a home, and you can get everything ready so that when the lease comes up, then you can be ready to buy.
And in some instances, there's programs like USDA, which we're going to talk about, and FHA, where you can have small amount to almost 0% down when it comes to a down payment, correct?
Correct. In many instances for first-time home buyers, the loans that are structured are structured with minimal money down. That is to say, oftentimes it can be less than $1,000 total out of pocket, because of not only the loan programs like USDA, but locally here in Salisbury, there's a Salisbury Neighborhood Housing Organization, and the state of Maryland has the Maryland Mortgage Program, which gives grants and bonds and deferred mortgages to help you get into homes, because home ownership is what makes our economy thrive.
So there's actually grants and different programs out there that potentially some people could qualify. They could actually get grant money to purchase a house.
There are, and there are restrictions in every case, but a lot of times there are grants or deferred second mortgages, so you don't have two payments. You still have just the one mortgage payment, but you don't have to have the money saved. It's a common thing that a lot of people say, I don't have $10,000 saved, so I can't buy a house. It's not the case anymore, because the government's realized that, and they've put programs forth to allow you to buy a home without money saved.
There's a great loan program that's out there that a lot of people don't know. It's called USDA. When you hear USDA, you think Department of Agriculture, and you think farm. People don't understand or tie that together with that's actually a loan program. And that's actually a loan program where a homeowner could purchase a property and put 0% down. So, sounds like a great program. Tell us a little bit more about that.
Sure. It is a great program that allows for, in rural areas, because it is geographically centered, people to buy homes with 100% financing. So that is to say there's no down payment. There are also always, in any transaction, closing costs, but similar to FHA and other government subsidized loans, you can get enough from the seller in many instances so that they're going to pay the entirety of the closing costs. The program is designed so that moderate income families can afford housing without the need to have the down payment money saved. It is income capped, and as it is geographically oriented, so you cannot be in Ocean City or in the center of Salisbury, but short of that, here on the peninsula, pretty much anywhere else is eligible for financing.
So, quote unquote, rural areas.
Correct.
Yeah. And in that case, what are the credit requirements?
So with USDA, you do need to have some established credit. It's not a program where someone with no credit can apply for. As long as you have at least a couple of trade lines that have been more than a year old, so some established credit, and your score is at 620 or above, you can potentially qualify. If your score is higher than that, the process gets easier, the rates get a little better. But a big advantage of USDA is if you do qualify for it, not only is it 100% financing, but the mortgage insurance factor is less than half that of FHA.
So essentially, if you're looking at a $100,000 house, USDA qualifies, you have the credit requirements, you don't have to put any money down to purchase that, and you could hopefully negotiate your closing costs, so you potentially could get in the house for zero money out of pocket.
Correct. If the loan is structured in such a way that you can have the seller pay all the closing costs and you don't need a down payment money, the only money that you'd be looking out of pocket are for things like home inspections, termite inspection, things like that that you would want to get anyway.
Sure, sure. Wow, sounds like a great program. And again, we appreciate you taking the time to explain this to us.
It is a phenomenal program, especially here on the peninsula where almost the entire area is available, and it's a great way for people to get into homes without having to pay a down payment.